Microsoft just dropped another absolute monster of a quarter. And, if you're an investor, the numbers, they're almost hard to wrap your head around. The real story here isn't just growth for growth's sake. It's about how artificial intelligence is completely rewriting the playbook for one of the biggest companies on the planet. So let's get right into it and break down exactly what went down in their third quarter. Let's just start with the one number that says it all. $42.4 billion. That's what Microsoft Cloud brought in a single quarter. That is a record, and it's up a staggering 22% from last year. This single number is really the foundation for everything else we're about to talk about. All right, so here's how we're going to break this all down. First, we'll hit those blockbuster headline numbers. Then, we're going to dig deep into the AI growth engine. After that, we'll talk about the surprisingly strong foundation beyond AI, which is a really interesting part of the story. We'll look at the whole business, and then we'll wrap up with what Microsoft is telling investors to expect next. Okay, so let's start with those headlines. It's one thing to say it was a record quarter, but it's the sheer scale of the performance that's truly, truly remarkable here. What's so interesting here is just how strong it is across the board. Total revenue, $70.1 billion, up 15%. Cloud revenue, like we saw, up 22%. But I want you to look at that last line, commercial bookings. You can think of this as future revenue that's already signed and under contract. It's up a massive 33% to $315 billion. This is a huge signal that this incredible growth isn't a one-time thing. It's actually being locked in for the future. And this chart, well, it shows you the engine behind that cloud number perfectly. Azure, which is Microsoft's main cloud platform, actually sped up its growth to 35% year over year. In today's economy, for a business of this size to not just grow, but to grow faster, that's incredibly rare. It just speaks to the insane demand that they're seeing right now. And that brings us right to the heart of all this excitement. I mean, you literally cannot talk about Microsoft today without talking about its huge bet on artificial intelligence. This is where the story gets really fun for investors. The CEO, Satya Nadella, just frames his strategy so well. They don't look at AI as just another product line. To them, it's a fundamental utility for every single business out there, kind of like electricity or the internet. And that big picture vision is what's driving their entire strategy and why their customers are investing so heavily. So here it is, the most important number you need to know to understand the AI impact, 16. Of that incredible 35% Azure growth we just saw, 16 percentage points of it came directly from AI services. That means almost half of Azure's growth right now is being fueled by the AI boom. This is the clearest metric out there that shows how this tech shift is hitting the bottom line. And this isn't just one hit wonder. The adoption is happening across their entire suite of products. GitHub Copilot, which is for software developers, now has 15 million users. That's a 4 times increase. The number of companies paying for Microsoft 365 Copilot tripled in just one quarter. And at the same time, all the tools that let companies build their own AI are just seeing explosive growth. So from an investor's point of view, this proves the AI bet is not just hype, it's turning into real, widespread, paid deployment. But here's the plot twist, and this is something every investor really needs to get. As mind-blowing as the AI story is, it's not the only story. In fact, what happened this quarter in their core cloud business was, I'd argue, maybe even more impressive. This quote from the CFO, Amy Hood, on the investor call was a total stunner. Everybody went into that call expecting AI to be the star of the show. But she was crystal clear that the biggest surprise, the place where they beat their own expectations the most, was in the traditional non-AI parts of Azure. So let's just put these two things side by side. On one hand, you have the AI services, where demand is literally growing faster than they can even build the data centers. And at the exact same time, you have the core non-AI business, which also sped up its growth. I mean, for an investor, this is the absolute dream scenario. You have a massive new growth driver landing on top of a foundational business that's also getting stronger. The company is just firing on all cylinders. And you see this everywhere. Companies are moving their most important mission-critical systems over to Azure faster than before. Key database products like PostgreSQL and Cosmos DB are seeing growth accelerate. This isn't about the new, shiny thing. This is the deep, sticky, fundamental stuff that businesses are built on. It is a sign of incredible health in the core of the business. Okay, so let's zoom out a bit now and see how this strength plays out across the rest of the company. Because it's not just the cloud. Microsoft's other divisions also put up some really impressive results, and it just paints this picture of a super healthy and diversified tech giant.
So here's a quick look at how the revenue pie is sliced. Now, while intelligent cloud, that's where Azure lives, is the fastest growing piece, the productivity segment, which has Office and LinkedIn, is actually still the biggest. It's pulling in almost $30 billion. And then you have more personal computing with Windows and Xbox, and that's still a massive $13 billion business all by itself.
And if you dig into those other parts of the business, you just see more and more strength. Take LinkedIn, for instance. It just crossed a massive milestone, 1 billion professional members. That really solidifies its dominance. But more importantly, its advertising business saw its revenue growth speed up for the second quarter in a row. Then you pop over to gaming, and you see clear momentum in their subscription strategy. Revenue from PC Game Pass shot up by over 45% year over year. This is a huge sign that their Netflix for games model is really starting to catch on and gain serious traction. And hey, you can't forget about Windows. With a deadline to end support for Windows 10 getting closer, businesses are upgrading. Commercial deployments of Windows 11 jumped almost 75% year over year. This is like a powerful built-in tailwind that should just keep driving predictable revenue for them. So that was the quarter, an amazing quarter. But for any investor, the big question is always, okay, great, but what happens next? So let's look at the company's guidance and some of the key challenges they're actually flagging on the road ahead. Looking to the next quarter, the guidance they gave is still incredibly strong. Management is forecasting that the intelligent cloud business will grow over 20%, and that Azure specifically is going to keep up its blistering pace, growing between 34 and 35%. The big takeaway for investors here is that management fully expects all these powerful trends we've been talking about to continue with full steam ahead. Now, one key metric for investors to watch is capital expenditures, or CapEx. Basically, it's the money they spend building data centers and buying servers. They expect to spend even more in the fourth quarter to try and meet all this demand. But, and this is a big but, they also said that the growth rate of that spending should slow down next fiscal year. That's a really positive sign for long-term profits and margins. So, after a quarter like this, with growth speeding up and the guidance looking so strong, you have to ask yourself, right? What could possibly slow this train down? What's the single biggest risk or challenge on the horizon for them? And this is the answer, straight from the CEO himself. Their biggest problem isn't the competition. It's not the economy. It's not even getting their hands on enough AI chips. It's power. They literally cannot get enough electricity in the right locations to build data centers fast enough to meet the overwhelming demand for their AI services. Now, from an investor's perspective, that is maybe the best problem a company could possibly have. It's the clearest signal you could ask for that the AI revolution isn't just real. It's still in the very, very early innings.